Peter McGuire from NG Farah. Pete, good to see you.
Good morning, Brooke, and good morning, Carson.
We can start with the oil price because that's the one been in focus with Middle East tensions. Some bit of disagreement about whether that's added much to the oil price lately or not. What's your view?
Well, over the last few days, Brooke, we certainly saw an upbeat and up around about 3 or 4% from 85s to nearly 89, and now it was sold off overnight due to some form of peacekeeping accord. Hillary Clinton's flown in, and there's talk that Hamas and certainly the Israelis, if we can see that ceasefire for 24 hours, then I think that there's going to be even further downward pressure for crude, and you probably see under $85 a barrel. So it was geopolitical all the way through.
Swinging the other way, nat gas, let's just eye the fundamentals that are playing out in this market, particularly Mother Nature.
Sure.
The US consumer very kind of much hinged on this one. For
Absolutely. Well, this time of year, it's not. It's traditionally that's how they heat the northeast housing, as far as nat gas and of course heating oil. But we've seen the nat gas price go to a decade low in April of this year at around about $1.80 a million BTU, and now it's trading the best part of $3.80. Goldman Sachs is saying you'll probably see a forecast all the way through to about $4.25, $4.40 range in 2013. So it's certainly far more expensive, and that's going to impact, I'm sure, the consumers as far as retail land across pretty much the whole world.
So you would be going long and taking it?
Well, continue on that long bias, absolutely.
Right. Got a chart of the 5-year of nat gas. Well, actually, let's look at this one, because this is another kind of a fulsome chart. What are you really dissecting here?
Well, I wanted to bring that to the viewers' attention, Carson, that certainly we've talked many times, and Brooks all over silver and gold, of course, and I say that nicely, but I mean...
Yes.
But when we look at 19.5% up, diamonds aren't there, Brooke, that's the other chart. Silver is 19.5% up for 2011, and it's had very, very strong growth over the last, pretty much the last decade, and gold, of course, is up 10.7%. Now, many forecasters are saying that with continued fiscal cliff, we'll probably see up through 1800 in the not too distant future. So I think that gold will probably rise to around about 12 to 13%, and it's the 10th year in a row, well, I think it's the 12th year in a row that we've seen annual growth across the precious metal sector.
That one at the bottom is...
It's exactly what I just looked at as
that's the softs. So that's
Jim Rogers would be kind of quaking in his boots at that one, wouldn't he?
Well, he might be. I mean, some of those softs, though, are very, very heavily bought up. And there are some softs that have done extremely well, considering wheat and soy that we've spoken about, and of course the corn market. But when you look at the composite, which it engages, some of the other markets have performed very well. Copper's always a wonderful barometer as far as the economy, about 5 or 6 from the bottom there. And
because that's almost mirroring US growth, isn't it? Dr. Copper.
Well, that's
the revised call on that? 2.7.
Exactly, 2.7%.
And I'm just thinking of the comments from Ben Bernanke overnight. He's saying, 2013 could actually be a great year for the US. If the fiscal cliff
well, they're going to print more money, Brooke. They're going to have record low interest rates.
And he keeps his job.
And he keeps his job. That's right. So he's got no problems at all. It's going to be a wonderful year. He was on the unemployment skids there if Romney would have got in.
But do you see the equation shifting at all? To actually change some of those asset performances. We know past performance is not an indicator.
I don't think bond yields, when you're looking at Spanish bond yields and the other markets, no, I don't think there's going to be any great growth there. Some of those emerging economies could do quite well, but primarily I think it's going to be focused very much across the precious metals again.
So it's much of the same?
Much of the same, and they just keep on becoming more... when you look at the likes Hank Paulson, John Paulson, George Soros, and so that are buying, record hauls as far as gold and ETFs, then I think that mood is going to maintain, and it's going to be upward and onward.
From mood to Moody's, the French go and have another Gauloise, is what they might well be saying, to kind of just put this one into context. People saw it coming, didn't they? And it's not kind of game over when you get a little notch lower on your credit rating in this environment. No,
but S&P downgraded in January. Moody's have been on the watch naturally since February, and they've finally come out and said, well, right, we're no longer is France a AAA, so they've notched it down. It's just a reality check, but it's certainly something that you don't celebrate. I don't think the champagne would be flowing, around the Eiffel Tower at the moment, but it's just the reality check that the economy is really having a little bit of, the stuffing's been knocked out of it.
Is that likely to be the flashpoint for markets early into next year, late into next year?
I think that combined with, and Europe was off a little bit after that, but when we saw what's, the fiscal cliff not far away, and we made reference to it earlier, these aren't great signs. So when Bernanke comes out and rejoices about how 13 is going to be a wonderful year, I'm not sure how he sees that. Maybe we're going to see a turnaround in US housing, maybe unemployment numbers are going to get healthier, but it's just going to be, I think, a very interesting year. I think 13 could be a very, 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 very tricky year.
Maybe we all need to go to London. SocGen is holding an event, a strategy event in Jan called It's Dark, and we're wearing sunglasses. Albert Edwards fronting that one, so go figure.
Well, we'll have to lob over for that one.
Pete, we'll see you next week.
Thank you, Carson. Thank you, Brooke.
All right.
Thanks, Pete. Pete McGuire from NG Farah. Work started on